Welcome to your role as the finance officer of your chapter. PMI congratulates and thanks you for taking on this important role. While your chapter is a nonprofit, finances still play a major part in your chapter's sustainability. Today, we'll start by exploring these topics: your responsibilities as a finance officer, an overview of chapter finance, and policies and controls already in place. After that, we'll discuss how the board is involved with finance, how to implement the annual budget, and how to report your chapter's financials. Before we get into all this, let's meet another newly elected chapter leader. With a background in accounting and a recently acquired PMP, Chris here is excited and a little nervous to be the new finance officer at the local PMI chapter. Chris is eager to start, but will need some information to get going. Throughout this orientation, we'll look at Chris's notes to help us check what we covered. To get started, what exactly will you and Chris do in this new role? Well, according to the Chapter Volunteer Role Delineation Study, you are responsible for maintaining and presenting all financial records required for chapter operations in accordance with the chapter and the bylaws. Does this mean you're the only person responsible for finances? Not a chance. Your fellow board members are definitely involved, and there may be other people, like bookkeepers, accountants, or auditors involved with the actual accounts. In the end, you are the master of the accounts. This means you will maintain a balance sheet and income statement. In a nonprofit, these are called the Statement of Financial Position and the Statement of Activities, respectively. The Statement of Financial Position accounts for assets, liabilities, and retained earnings or equity. The Statement of Activities is where you'll manage revenues and expenses. Now, do any of these terms seem confusing so far? It's okay if so. You can reference the Chapter Leader Guide on chapter finances for a list of definitions mentioned today. Just check the appendix if you ever get confused. The guide can be found in the VRC under Managing Chapter Finances and Administration. But for now, let's do a quick recap of what we've just covered. Thankfully, Chris's handwriting is remarkably good. It looks just like Arial font on a computer or something. Anyway, in this section, we discussed how you are responsible for maintaining all financial records. The board and maybe other people will support your work, depending on your chapter. And the finance guide will help you understand the details of our discussions today. Now that we've talked about how you fit into this role, let's take a step back and look at the big picture. Do you think this job will be the same as managing a project? What about legal matters? And how do you make sure the accounts are accurate? Sit tight as we answer these questions in the overview of this orientation. In looking at the big picture, you must first consider how managing chapter finances is different from a project budget. Chris here has an accounting background, but really has more experience leading projects. This means Chris might need to think a little differently when it comes to chapter finances. Unlike a project where you manage spending alone, a chapter needs to balance finances so that revenue outweighs expenses. This way, the chapter can be sustainable for future members. After all, members rely on you and the board as fiduciaries to be fiscally responsible. Of course, being responsible means following the law. What legal matters should you consider for chapter finances? Well, first, PMI chapters are separate legal entities from PMI, so it really depends on your local requirements to qualify as a nonprofit. Chapter leaders must be aware of these requirements to maintain incorporation. Taxes are important too. Your chapter should be aware of the local tax laws, requirements, and any exemption rules. We'll touch more on this in the reporting section later. Do you think ethics are involved too? Of course they are. Although it's not a legal requirement, part of your fiduciary duty means your chapter should operate transparently with your membership and with PMI. And one way to be transparent with the membership is through audits. Well, how does an audit work, you ask? Audits ensure that all accounts are fairly presented and free of misstatements, and that the chapter uses accepted accounting practices. This is done by verifying transactions with third parties, completing inspections, and so on. While audits are the most rigorous assurance, you won't need an audit every time you want to double-check the books. Reviews provide a second set of eyes on your financial statements. They can be useful when you need some assurance, but aren't as formal as audits. Now, if you represent a smaller chapter, like under 300 people, you might not be able to pay for an audit every time you need one. Consider other volunteers who can provide pro bono or low-cost options. In these cases, the board should decide when a more formal audit should be done. And for this audit, you might want to hire someone from outside the chapter. So now that we've covered some big picture matters, let's take a break for a quick recap and look over Chris's flawlessly rounded shoulders to check these notes. We discussed how a chapter's finances are different from a project budget because they need to be sustainable. There are several legal considerations involved with finances, and you should have audits and reviews to make sure your accounts are accurate. So things are coming together. We've covered what's expected of you and what the big picture is for chapter finances. Now, let's go a little deeper. What should your next steps be? How do you really start to take on this role? Let's take a look now. In starting your role, your chapter will probably already have policies, accounts, and tools set up. But with any change, such as new leadership like you and Chris, you will want to reevaluate these things. Let's take a closer look now. First and foremost, chapters must have financial policies. Make sure you understand the policies in your chapter. Some may need revisiting. Policies should include processes for accounting, controls for spending, and rules for records retention. You will also want to consider everything that impacts the flow of money and be sure the appropriate controls are suitable, like contract reviews, credit card limits, dual signatures on checks, and so on. The more thorough the policies are, the more likely you will avoid risks like fraud, embezzlement, or mistakes in general. But if you're concerned that a policy or control isn't working, bring it to the board's attention for a discussion. After all, policies are set at a board level and changes need to be voted on and approved by the board. Of course, there is a lot more to consider with policies and controls. It's a good idea to check out the finance guide so you can have a more thorough discussion with your board around all policies and controls. Next, where will you keep your assets? Probably not in a shoebox, right? You want to be sure you have the best bank for your chapter. Most banks will accommodate nonprofits and provide no service charge accounts, free checking, and may even pay interest on balances. For security's sake, consider a separate account for your chapter's reserve funds. And for convenience, check whether the bank uses electronic banking, payment gateways, or other web-based options. Chapter policies will show how to manage electronic transfers. Third, look at the tools you have that maintain the accounts. Depending on the sophistication of your chapter, these might range from paper-based books to accounting software to expense reporting apps. Keep in mind that you should have a backup person who has access to these accounts, just in case you're unavailable. But now, let's take a quick break and look through Chris's magically floating notebook for a quick recap. In this section, we discussed 3 big steps to set up the accounts in your chapter. First, evaluate all the policies and controls your chapter utilizes. Second, make sure you're using the best possible bank account for your chapter. And lastly, make sure the accounting tools in use are most appropriate for your needs. Now, you and Chris will be the ones in charge of the accounting situation, but do you think this means you two are the only ones responsible for your chapter's finances? What about the chapter activities that rely on finances? Surely you can't be responsible for both. Putting it simply, it's all up to the board of directors. Let's look at how the board influences your chapter's finance. Your entire annual plan is supported by the finances. Every activity and asset needs to be covered financially. And as the finance officer, you may think it's up to you to take on this heavy lifting. Don't sweat it though. You can take a breath knowing this dynamic isn't all your responsibility. It's up to the entire board of directors to understand finances and run the chapter. This means, first and foremost, that the board should understand that although your chapter is a nonprofit, it should not operate at a loss. We've touched on this before, but let's explain a little further. In some places, being a nonprofit means that the organization is not taxed on business income. This is a great thing. Of course, this shouldn't be exploited. The board's focus should be on delivering services for member value, not making a profit. Now, this obviously doesn't mean chapters can't have reserves. In fact, they should, because they need to be sustainable, just like a regular business. And as explained before, it's important that your revenues exceed expenses so you can grow your reserves and build on the services you provide your members. The reserves should be built into the annual budget according to the chapter's financial reserve policy. And the budget, of course, is driven by the annual plan, which is at the heart of the board's duties. We'll cover the process for creating the budget later. For now, all you need to know is that the budget should be made so that you have some extra funds at the end of the year. These contribute to your reserves. Well, reserves sound nice, but what exactly do they do? Putting it simply, chapters need to be sustainable, even when income isn't there. Reserves are savings that your chapter can use if you're in a bind and need some emergency funds. It's important that reserves are actually available when planning. You might be thinking, well, duh. But that is to say, the board cannot borrow funds against future revenue. Instead, there should be enough reserves to cover your exposure. But a question upon knowing this, how much is actually needed in your reserves? Well, it depends on the chapter. The reserves may represent anything from 6 months to 2 years of the average expenses over the past 3 years. But in the absence of a determined amount, the reserves should be about 10 months of expenses. So the board is really the group that makes the big decisions around finances. It's your job to provide the details and guidance that enable these decisions. How about we check Chris's thin notebook to be sure we didn't miss anything? In this section, we talked about the board's involvement with finances. Firstly, all board members should understand that although your chapter is nonprofit, it should also create revenue to be sustainable. This requires that an annual budget is created out of the annual plan. And, as part of this budget, the board should account for reserves needed for the year. So now we're getting deeper and deeper into the details of finances. Chris seems a little worried because although we've explained so much, there's still a big piece missing. Some sort of structure, some kind of plan. As project managers, you must be wondering, don't we need a plan for all this? Although chapter finances are very different from project budgets, yes, you still need a plan. In our next section, let's look at the general process for creating a budget, your financial plan for the year. Throughout the year, the budget will guide certain decisions. Should Chris get that extra projector for the event? Check the budget. Can you really afford a new website? Check the budget. The budgeting process should happen at the same time as the annual planning process. Now, there's no rigid timeline for these processes, but if the board wants to change membership dues, for example, be sure the budget is complete before September 1st. This is PMI's deadline for membership due changes. When you actually start the budgeting process, you'll first need to identify ongoing expenses and revenues. Then, you'll need to create a listing of the programs, projects, and activities that accrue revenue or expenses and provide a high-level business case for each. After you've identified those things, create a first draft of the budget, which should include a complete list of revenues and expenses and a net situation, that is, ideally, positive. If the budget results in a negative net situation, you should reassess and prioritize each entry until you reach a good situation. Now, how detailed should you get? It will really depend on the amount and volume of transactions. And if you base your budget on monthly transactions, tracking might be easier down the road. When it's all finished, you will present the budget to the board, who will either approve it or ask for a revision. As you're drafting the suggested budget, check the reserve policy to determine if any action is needed. For example, if the board finds it necessary to contribute more to its reserve, there should be a budgeted surplus at the end of the year. After the budget is approved, you can use it to track the finances of each initiative or portfolio over the year. You can do this by comparing the budget monthly to the actual expenses and revenues with variances explained to the board. The comparison may help the board with future decisions, And these comparisons should be documented as a forecast so the revised year-end numbers reflect reality. As you know, a forecast is a reflection of any changes to the planned budget. You can think of the budget as your baseline and the forecast as your actuals, including projections, which is updated over time. The budget should not be changed during the year, as it is a key financial control. In the forecast, a key deliverable is the confirmation as to whether the chapter will meet its budget for the year. This whole process should be pretty thorough, so it's important that you refer to the finance guide for more details and guidance. And although we covered a lot here, it looks like Chris seems at ease. Now, there's a plan. While Chris takes a quick break outside this curious box, let's check these notes for a little recap. In this section, we covered how to create a budget, how desired reserve levels should be built into the budget, and how to track the budget against the chapter's actuals by using forecasts. It's the end of yours and Chris's first month as the finance officer. Congrats! Your budget is set, you have your accounts, controls, and personnel all set up. What else is there to do? Well, think of this. Are there others who want to know about finances? Shouldn't there be a formal way of presenting all this? Of course there should. In our last section, Reports, let's see which parties you should keep updated in your financial tenures. Reporting ensures that people know how the chapter is doing financially, which in turn fosters transparency and trust within the chapter. Before you make any reports, it's important that you evaluate the budget in the first place. To do this, it might help to know some ratios that determine how stable your finances are. The Quick ratio measures how readily the chapter can meet its current liabilities. The Operating Reserve ratio determines whether there are enough resources to support the ongoing operational plans. And the Program Efficiency ratio may be used when a specific event is being offered, like a professional development day. It compares the cost of the event against the total operating expenses for the year. For more details on these ratios, check out the Chapter Finance Guide. There will be more ratios in the appendix too. After you've assessed your finances, you'll be ready to give a report. Of course, you're probably not reporting only once. There will be several reports given to several audiences during your tenure. You can think of these parties as your stakeholders who are either interested or involved with the chapter's finance. First, monthly assessments should be reported to the board, and they should include actual transactions and forecasts compared to the budget. If an activity's actuals do not match the budget, you should explain why. You'll also need to make quarterly budget reviews and forecast updates to year-end as well. Are there more people involved than just the board? Of course there are. Audited annual accounts may be presented to the membership at the annual members meeting. Here, it's required that there be a motion to accept the reports presented. Also, the annual charter renewal process requires chapters to report the finances of the previous business year. The chapter president will likely ask that you provide that information at the time of charter renewal. And as with all finances, you will need to figure out taxes. We touched on this a bit before. You should consider items like income tax returns, sales tax returns, or service tax returns. Now, there's no single rule that applies to all individual chapters. It's up to you to determine how yours should file taxes. Consider all the legally appropriate government levels, whether it's federal, state, provincial, or others that might require tax returns. In the end, you'll need to submit documentation to PMI to show tax compliance. And if you ever need tax assistance, reach out to your chapter partner. And now, at the end of our last section, Chris can finally stop taking notes. Good thing, too. It looks like that hand could, use a break. These last notes should help us recap this last section. You can use ratios to evaluate your chapter's finances. You'll make several reports for the board of directors, the chapter membership, and at the annual charter renewal. And remember to look into all levels of tax requirements for your chapter. Now, at the end of our session, we hope you learned a couple of things that'll help you in your new role. If we're going to take one last gander through Chris's notes, we'll see what we covered today. The specific responsibilities for your role, a high-level overview of chapter finances, evaluating the accounting situation, the things that the board should consider, how to set up a budget, and how to report on finances. Chris, for one, is ready and confident to jump into the mix of things. Are you? It's okay if not. After all, Chris is just a two-dimensional character in a virtual orientation. If you're still a little uneasy, there are resources you can use to help you out. We've mentioned the Chapter Finance Guide several times today. If you already have the guide, that's great. But PMI also just released a new one that you can find at the Volunteer Resource Center. Just look under the Managing Chapter Finances and Administration tab on the Resources page. And if you're ever in a bind, feel free to reach out to your chapter partner or administrator for guidance. You can find your partner or administrator at the Volunteer Resource Center on the Contact Information page under Chapter Leaders. We hope you gleaned something new today, whether it's about your chapter's finances or about Chris's curious existence in this virtual world. Before leaving today, be sure to check out the other modules in the Chapter Leader Orientation, Chapter Management Essentials, and Welcome to PMI Chapter Leadership. Thank you for your time today, and best wishes as you take on this new role.